Hey everybody, good afternoon. Welcome to 12-Minute Trading. My name's Doc Severson. Today is Monday, the 10th of November in 2025. I'm going to be running this session solo. Dave is out this week. So we'll go through the markets here in the next few minutes. I'll probably just be taking 10-15 minutes of your time, depending on your questions. So if you have anything that you'd like me to take a look at, please let me know. And of course, if you're watching this on a replay, if you want to post some questions for next week's session, please let us know. You can email us at support@12minutetrading.com. All right, let me park myself down in the corner here. Let's go look at the S&P. So we've had a little bit of movement today, I would say, to the upside because of the apparent shutdown is about to be over. I don't know if they voted on it yet or not. I know that they did a trial vote over the weekend and they had 60 votes to be able to pass the CR in the Senate. So that's a good thing. I imagine it's always good to have certainty into the market. So I'm just going to leave it there. Now, what we've got with the S&P, let me bring my pen up here so that I can annotate to what's going on. The problem that I have with this market is that even though we have potentially a big move on our hands, we've also got this ball and chain down here on the monthly chart. We've had, what have we got? 30 some percent, maybe 40%, whatever the numbers are here. Doesn't really matter as to the exact number, but that's a long way to go from 4,800 up to 6,900 in a very short period of time. So that's almost an unprecedented move that we've seen. Now here's the controversy, or here's the conundrum that we're running into, is the weekly chart has got a lot of energy to go in either direction, especially. And this could rip off another couple hundred points on the S&P, which is going to be a big move. It's going to surprise a lot of people, I think, with the violence of that move. Now, which direction is it going to go? This makes me wonder if we are going to see that move to the upside. When Congress votes on the CR and it passes, is that going to be a sell the news moment? I don't know. I'm not bearish right now. But I'm looking at this and trying to rationalize how we're going to tack on another couple of hundred points in the S&Ps. Now, we did have something similar to this happening in, let's see, I'm going to move this back to, see if I can move this back to 2017, 2018 timeframe. We had the same kind of thing happening during 2017. We got into severe exhaustion. It paused for a month, and then kept on going, and then got even worse. It went even worse, and then we got ourselves a little, I think it was a 10 to 15% corrective move that we had over a number of months, and it kind of ruined the first half of 2018. 2018 was a very difficult year for most people to trade. It was actually flat. From when we started to when we ended, it was actually zero flat, if memory serves. So we're looking at something like this. So could we get one final blast to the upside to cap off the year? Absolutely. That's kind of what Dave has been saying, is that the time of year, the seasonality, the money on the sideline, everything like that lines up with seeing one final blast. And that could happen. I mean, that is an extreme level we had down there, about 17 or 18. And right now what we're looking at is something almost there. So right now we're down to about a 25 level. So could we see one more rip to the upside? Absolutely. Let's go take a look at some of the other indices that we have here. So that's the S&P, which is the best overall index to look at. The NASDAQ is in equal shape. Actually, the NASDAQ is responsible for, I believe, 43% of the S&P, and this is almost in exactly the same shape. Now, looking at other indices like the Russell's not quite as bad, but I think there's some uncertainty here. A lot of this rally that we had in 2025 all came on the backs of the expected rate cut. And not just one of them either, but a whole series of rate cuts came on the back because, as we all know, small business are typically funded through debt. And that's what we have in the Russell Small Cap Index. So if there is doubt in terms of the trajectory of the rate cuts, well, that kind of calls into question as to whether or not this is going to continue. So right now, I'm looking at the Russell as a big question mark right now. And then the opposite end of the spectrum, the blue chips, the Dow 30, the industrials, are actually in pretty good shape. This is in pretty good shape to maybe absorb some of that. So if we have the NASDAQ and the S&P kind of tired, we still have some headroom on the Dow to be able to absorb some of this sideline capital as well too. Now, something else that I'm seeing, and I'll just bring this up on an intraday basis. Look at that. We are getting moves beyond the expected move. So we're not pricing in enough implied volatility. These blue lines represent the upper and lower expected move of the day. This is the opening range, this red and yellow box here. And what we're getting is we're getting about an hour of relatively flat price action, about an hour of that. And lately what we've been doing in the trading room is setting up what we call iron butterflies. So these are 0 DTE iron butterflies. And here's this one that we set up this morning. We centered it around 68.10 and are just below that point. And we were in and out of this trade in just minutes. So I'm looking to make $50 a contract on these trades. And this is something I've been doing for a number of years now. And if we are in the right conditions, this can be a really quick and reliable trade. What we don't want to do is to trade this during times where the market is just ripping, either to the downside or to the upside. So we typically avoid these types of times where we have huge movement. And we can kind of look at this through what's called average true range. Let's see if I can find this here. Yeah, ATR. So right now the ATR on the S&P 500 was actually rather low through the summer. We've gotten a little bit of a spike here lately, but it's still relatively low compared to some of the big corrective action that we had back here. So we want to be doing this strategy during these times where it's relatively low and quiet, like here. And even here has not been too bad lately. So even though we've had a little bit of corrective movement, the implied volatility has been high enough that it gives us some room to work with. So look at that, up 97 handles on the day. It's not every day that you see that kind of thing, but 2% on the NASDAQ, and we can see exactly who's driving things right now. So like AMD is up 5.5%. We've got Amazon is up a couple of percent. We have Apple is up. We have the Google twins up quite a bit. And Palantir is surprisingly one of the strongest ones out there after all the bashing that they took last week, right? Look at this. NVIDIA is up 5.5% today. So this is quite a bit of a Mag 7 rally. We have 2-to-1 advancers over decliners, but those advancers that are mostly being led by the Mag 7, which was beat up last week quite a bit. Okay, folks, let me know if there's any questions on what you're seeing. So kind of to wrap things up here, what you're seeing is the market responding to certainty that came in over the weekend. We sort of talked about this. We said this last week that when it looks like the shutdown is about over, then all of a sudden everybody's going to go, oh, this is great. Okay. Sideline capital is going to come into play again because it's certainty. The liquidity that the government does provide directly or indirectly is also going to come into play. So that's a little bit of a problem that we saw over the past week or two, is that we had a little bit of a liquidity issue. And so that's going to go away. So will this continue higher? I don't know that yet. I don't know that. I don't have a crystal ball. We have a relatively large range to work with. I think this was like a 4.3% haircut. I was looking for 5% to get more aggressive. I may have to chase this thing to some degree. Don't be surprised if we set up a lower high on some kind of unknown, unexpected risk that comes in. Maybe there's some kind of delay on the CR vote, those kind of things. So don't be surprised to see something a little bit more complex come along and give that monthly chart a chance to come back. Let's see, Chalupa Man, would I expect a large move if the Supreme Court rules against the tariffs? I don't know. If you look at what's been going on throughout the entire year, it's we've gotten certainly a big move in March and April, because I think that was a little bit of a shock in terms of the scope and the I guess the amplitude of the tariffs. But at this point, I don't think anything is a surprise one way or the other. And this kind of reminds me of the 2017, 2018 years, where it was just on and off again. Tariffs, trade wars, volatility throughout that point. So yeah, we might get some moves which are unexpected. And so that's why I'm saying watch out for a potential lower high that may set up over the next couple of days. And that may only drop down into another higher low and then take off from there. So we could get, while we're still in this box here, we could still get quite a bit of what I call shake and bake. So again, to me, I can't predict the future. I don't know how the market's going to respond to the Supreme Court, but the fact that we've been talking about something like that, the rumor has been the Supreme Court doesn't like the tariffs. So the market is always 100% efficient in terms of pricing in exactly what it knows at that current time. So if there's going to be reaction, I don't necessarily think it's going to be that huge. It could be a one-day reaction, could be a one-day wonder that comes along, and then the market finds its way. Right? Market is still, this is the one thing, the North Star that we have at this point on this market is we've got this trend. That is our North Star. So everything, we're going to continue reverting back to the mean until such time that we start to see, and this is what I call rule number 2, we start to see smaller time frames actually breaking trend. And then if that infects a larger time frame, this is where things propagate. If the weekly chart starts throwing off lower highs and lower lows, that turns into a monthly swing down. And then eventually we'll see a swing back up again. Where I want us to be on guard for is a monthly lower high. That's when things really come unglued. And that's what we saw in the spring of 2022, a monthly lower high. But we haven't seen a monthly lower high for a long time. We haven't seen a monthly lower high for a long, long time, really since this time frame here. So again, rule number 2, reversals start from the inside out and they propagate higher. Okay, anything else for today? Any other questions for today? Again, Dave will be back, I believe, next week. And so he'll bring his expertise of the macro. I'm more of a idiot savant. I just look at the charts and I let everything else fall out from that. because to me, looking at the charts will tell you exactly what has already been priced in. Not necessarily the future, but it sets up the range that the price will trade within. It also shows the polarity of the, oh, let's see, Frisky Anthony. Could you look at BTC? Certainly. All right, let's take a look at that. As soon as I can find the chart, bring it over here. Okay, so here is BTC is up about 1% today. What's the polarity that we have on the daily chart? We have lower highs, lower lows. We have what I call a slam dance down here. That was a very difficult support. This is where both sides of the ledger get wiped out. We do have a nice little lift off of here, but it's also moving into pivot resistance. So it's kind of a floor, if you will. So former support becomes new resistance from below. So I would not be surprised to see this roll over again. And what would probably, the market's always going to make the move to hurt the greatest number of people possible. And so I think what may happen in that case is that we drop down from there. Everybody, like, here comes the boo birds again. Oh no, it's time to sell. And this is where things can take off like that. Always look for the higher low. Here's the higher low here versus this one. This was a sell point. Oh no, this is, we're going down again, and then boom. So that's what we want to look for. So right now, it doesn't surprise me to see it having difficulty getting through 106. And it may, in fact, drop over the next couple of days if it's not able to get through there. Otherwise, then there's this descending trend line, which has also got to get through. Also, this green line, which is the 200-day moving average. And look at this, it's threatening a death cross again. Oh, no. The last time we had a death cross was back here. And that didn't last too long before it got blown out of the water. But we have to be careful here around the death cross. I don't use the death cross as a signal, just more of a filter, just more evidence of what's going on. Okay, so that's Bitcoin. I think Bitcoin is, once it gets going, I think we're due for one more swing on Bitcoin and crypto. And typically it's usually marked by lower quality assets leading the market at the very end. It's no different from any other type of risk asset where typically the crap rises to the top at the very end of a bull. And that's because people find the former winners, or the asset that did all the heavy lifting to get things up there, they find it too expensive, and so let's go for something cheaper. And so the same concepts happen during the stock market as well too. Thanks, everybody. Have yourself a great Monday. Okay, a quick one here. Steph is asked about Concordian. All right, let's see. What is this? CCD. I'll give this a try. This may be a different chart than you're looking at. I don't have a Concordian here. It may be in a different. CCD here is Calamos Dynamic Convertible CF. So I don't know if that's Concordian to you. And anyway, there's really no trend to speak of. Oh, it's Concrypto. Okay. Got to be specific with me again. Idiot savant. Okay, so there we go. CCD US dollar. We'll pick this one. Okay, that's a nice looking chart. So on a daily chart, it's not very old. It's put in a nice base down here, and it's in a buy signal currently. Let's look at this on the RSI Laguerre, and it's actually doing a good job of. It's broken out of this triangle formation. It's even retested that triangle from the top, and it's doing a good job of just sort of recharging on the fly, if you will. Weekly chart is still got energy. There's not there's only been around for a couple of months. So it's a good looking chart. It's a good looking chart stuff. All right, my friends, that's all I got for today. You guys have a good Monday. We'll see you next week. Bye-bye now.